Good morning and thanks so much for joining in. This is NDTV Profit. You're watching Ask Profit. My name is Mathew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Before we start on this program, let me tell you the benchmark is currently trading with cuts of about 0.1%. We'll get into the details in just a bit, but before we do, let's listen into the management of Marico. The Chief Executive Officer Saugata Gupta is speaking about the third quarter results and outlining the key factors that will drive the growth for the company going forward. Listen in.
I think two things. First, obviously, you're right that it has been low single digits for the third consecutive quarter. Having said that, I think this quarter was slightly different in the sense that we took a significant stock reduction in GT so that they become viable for core growth. And therefore, I think if we had not taken that correction, that growth would have been 4%, which was slightly better than last quarter. Now, I think two things. If you look at the last couple of quarters, there was significant inflation, which led to, consumers, especially in rural, either downtrading into smaller brands or titrating consumption. I think inflation is largely tapering off. We also seeing most of the players, including us, taking pricing corrections. I think the government continues to invest significantly in the rural segment. So we believe that going forward, especially from quarter one next financial year, rural volumes will definitely improve. We are seeing at least the first sign, especially in our core brand Parachute, where offtakes have started picking up. And then when the offtakes pick up, obviously it is followed by secondary and primary. As you know that because of the stress, a little bit of stress even in the trade, the STRs, the stock holding at retail also had gone down by 3 to 4 days. That has also led to some of the lower volume growth. But the offtake trends, for the first time, we are seeing reasonably encouraging offtake trends, which should translate into better volume growths as we move into the next quarters.
Right. So as price cuts anniversarize, as well as, modest inflation in copra helps, which you just mentioned, could you give us some numbers on the volume growth in Q4 as well as going ahead in FY25 in the core categories, that is Parachute and Saffola?
I think the way to look at it is we expect the volume growths to definitely improve. And I think as we move, I think you will see definitely from quarter one next year volume growths moving from the low single digits to slightly higher volume growths. It's very difficult right now to give an outlook. Having said that, I think we believe that at least in our core business next year, the volume growths will be definitely better. Saffola, as you know, suffered from a period of hyperinflation followed by hyperdeflation, and we also took some conscious calls to maintain threshold levels of margin. We expect Saffola also to move into mid-single digits volume growth next year. Also, the fact that there is no deflation that will translate directly into revenue growth. The other area where we believe we will again accelerate growth this year. We had to do some consolidation in our food business to get our back end right, especially our supply chain, our cost structure, and also our stock freshness norms, which we are now back, and therefore food also is expected to grow 20% plus, and digital continues to grow. So I think overall there will be better volume growth next year. And also as far as bottom line is concerned, we would like to strive to deliver low to mid-teens bottom line growth next year.
That was the management of Marico talking about the growth trajectory from here on. But let's shift focus to Bajaj Finance. It came out with its results yesterday and kind of a mixed bag there. The profit rose. However, it missed analyst estimates because of the regulatory action and more than expected provisioning. The income rose and however, there's concern around asset quality, and even the management said that they have marginally kind of decreasing the exposure in rural and slightly in urban areas as well. Kind of a mixed bag there. We're seeing the street reacting sharply to it. The stock is down around 4.5% in trade. Now, let me introduce you to the guests for today. We have with us Mr. Ashish Kapur of Invest Shop and Nirav Chheda of Nirmal Securities. Welcome, Nirav and Ashish, on the show. Ashish, I'd like to come to you first on Bajaj Finance. We've seen the results. The street reacted very positively after the business update, but kind of a big mixed bag in terms of the results that came out. How do you see going forward for Bajaj Finance, especially ending this year?
Well, I think, what happens is that, every company reaches some sort of a plateau at some stage in their growth. And Bajaj Finance has reached, I think, that kind of a plateau. It still remains a fantastic, fabulous company, or near impossible to replicate this model. So, and the consumer credit growth in India is going to keep growing for many, many years. That's also a no-brainer. So for any long-term investor who's bought at lower levels, it still remains a very good stock to continue to hold to. So one cannot be negative on the stock, but at the same time, I think fresh buying should be avoided because, two reasons. One is the company has become fairly big in size now, and to expect them to continue growing at the kind of pace which they have done over the last 2 decades is near impossible. So therefore, the discounting, the valuation is very high, and the kind of price earning multiple and other, other valuation parameters are all on the very much higher side than what it justifies, given the fact that the company is already very big, has a very solid base, but cannot grow at the kind of rates it has been growing over the last 2 decades. So therefore, the valuation has to correct to justify it to the level where it can become a buy. So my best guess is that it will probably not come down much because of its marquee status, but it will not do much also for the near term. I think at least for a year or so, it could at best be sideways. It could even go down a bit more, but I think at best it will be sideways. So not a great idea to buy, even despite the fall and despite the underperformance. The other thing is, one of course is size. The other thing is that the regulator here, and justifiably, is not very comfortable with such a large NBFC. They obviously are putting, compliance hurdles on the company, and which I think will continue. My guess is that at some stage, Bajaj Finance will have to change its structure into either a bank or some other more regulated kind of structure. Until that itself will reduce its earnings growth. So I think till the time the picture comes clear, I think for the time being, it's not a great buy at all, despite the fall. At best, a hold. And for a long-term investor, for 3-year plus horizon, it's definitely a hold. But buying can definitely be deferred till some more clarity comes, or the price falls further down.
Got it. All right. So that's the view on the fundamentals. Nirav, quickly coming to you, because we've got a viewer, Tanya, who's writing in and asking about the 1-year time frame, which so Ashish has spoken about the 3-year time frame, but based on the technicals, based on the current market price, would you suggest a fresh entry from a 1-year perspective?
Yeah. Hi everyone. In terms of Bajaj Finance, I don't think this is the right time to enter. This stock is in a consolidation, and its chart is much more like HDFC Bank and Kotak Bank, where this consolidation is going on, and I don't think this will end so soon. Having said that, it has hit the upper band of the consolidation, which is around that 8,000 levels. Should come down now up to the 6,500 to 6,200 band, which is a very good level to again buy, and that is when probably you can look to buy for that 1-year perspective. But the major real resistance here is around the 8,000 levels. Once on a closing basis that is broken, you might see good buying coming in Bajaj Finance post the breakout, and it can go toward that 9,500, 10,000 band, probably even higher. But at this point, I'd avoid buying.
Thank you, Nirav, for that. I request our experts to keep the answers short. We have a lot of questions pouring in. Next one is from VS Mohan from Talcher. They're talking about Yes Bank. They have already bought shares at 31 rupees, and that was 2 years ago. They want to know if they should continue holding on to it, or should they switch to some other stock within the sector. Ashish, what would you suggest?
Well, I think the answer would be to switch to some other stock, because Yes Bank, the capital base is now very huge. It will take a very, very long time to, the share to really move up. Though the turnaround is certainly happening, the performance is improving. I think the books have got clean, but I think it will still take a long time for this stock to start moving up because of a very huge capital base. So my idea would be to, shift to some other stock. I think within the banking space, you could look at, an IDFC first, or if you're okay with a larger cap, then of course there are many ideas, including ICICI Bank, which has had some period of underperformance and now looks very ripe for a nice up move.
Interesting. Sticking with the banking space, we've got a question coming in from Karthik from Visakhapatnam, but this is a short-term query. IDBI Bank is a counter that he wants to know about. So, Nirav, on the charts, how does it look?
Yeah, see, it's witnessed a very good move, a good reversal is in place. I believe even for short term, you can buy this stock. An important breakout has come in above the 80 level. So you can keep a stop loss of around 78 for your longs. Go long for a target of around 105 odd. It can be achieved in about 10 to 15 days time.
All right. Next up, we have a question from Jaya Krishnan from Kozhikode. They're talking about Dixon. They've bought shares at 6,165, slightly elevated levels. The current market price is around 5,900 rupees. He wants to know if he should continue holding on to it for the medium term. Nirav, on the charts for the medium term, would you suggest holding on to it?
Definitely hold on to it. A breakout was witnessed around 5,700 odd levels. The stock went up, it has come down to retest the breakout. So it's a good level to actually enter again. So you can average a bit at current levels, or, on dips up to 5,700 levels, and, hold on. I think 6,800 will be broken again. You can get about 7,500 to 7,800 as your target in the medium term perspective. So hold on.
We have to slip into a very quick break, and as we do, I'm going to try and get Smriti to say Kori code the right way. We'll be back before you know it, and we're going to take queries after that, so do stay tuned.
Welcome back. You're watching Ask Profit, and it's Kori code.
There you go.
Karthik, I've corrected myself and it's Kori code. But let's move on to the next one. We have a question from Sri, and he's writing in from Kerala. He's talking about Varun Beverages and Prestige. He's already bought the shares at 1100 levels, both of the shares, and he wants to know if he should accumulate these two. Now, Ashish, what would you suggest? Would you suggest accumulating both of them based on the current market conditions for both the stocks?
Varun Beverages, certainly yes. I think very, very good growth story, and I think it will continue to doing well at least for a few more years. So Varun Beverages is definitely a very great idea. Prestige, I think, is already the sector and even the stock has moved quite a bit, and I think I wouldn't recommend now buying more at these levels. You could continue to hold on, but I don't think we should add more at these levels.
All right. And by the way, viewers, if you got tough words to say in Punjabi or any other language, do let us know. I happen to say, you know how to say Kozhikode the right way. Let's talk about Tata Steel as well as Borosil. We've got Rakesh from Ghaziabad who's writing in, and he's bought both of these counters. Tata Steel at levels of 110 and Borosil at levels of 220. He's looking for a view for at least 1 year. So let me go across to Nirav on the charts. How do these two counters look?
See, Borosil seems like he's been holding on for the last 3-4 years, and the overall pattern is positive. 2-year consolidation is over. The stock has broken out above that 500 odd levels, and I believe he can continue to hold on. This stock is now slated to move up towards that 850-900 levels, probably even higher. So hold on to your position. Your stop loss now should be 410 on a trailing basis. For Tata Steel, again, a very similar story to Borosil. 2-year consolidation is over. It has broken out above important resistance of 120. I believe now the stock will break above all-time highs as well and probably move up toward that 180-200 level. So from that 1-year perspective, you're in the right stocks. Continue to hold them. Your stop loss for Tata Steel would be around 120.
All right. Next up, we have a question from Raghuram Patro from Bhubaneswar. They're talking about Patel Engineering, that they've bought the shares at 55 levels. Now, the shares is already a multi-bagger. It has given about 3x returns in the last 1 year itself. Ashish, do you have coverage on this one? And is there more upside to this stock?
Okay.
All right. We'll go to Nirav. Nirav, we've already seen a massive upside in the stock in the last 1 year. How does it look on the charts?
Yeah, see, on the charts, there's no doubt, the reversal is in place. But it has now come near a resistance area, and that resistance is a multi-year resistance at around 67-75 band. Once that is broken, only then you will see, further buying coming in. So at this point of time, I would suggest if you're holding on from lower levels, this could be a good area to book profits. Once 75 level is broken above, only then, buy again and buy very aggressively, because this stock will then again fly up toward that 125-140 band. So until then, just book profits and continue to watch.
Okay. Sai Krishna has bought PNB Housing Finance at slightly elevated levels, 844 thereabouts, and the share price is currently at 788 or thereabouts. It's down about 0.4%, but it's had a decent 6 months. It's gained about 24% or thereabouts. Ashish, on the fundamentals, would you hold on to this one, or would you switch to some of the banking names that you had suggested earlier?
No, I would hold on to. I think the company should do well going forward, and I think the stock price should also reflect that. So I think there's no issue in this. I think continue to hold on.
All right. Next up, we're talking about Chemcon Specialty Chemicals. Shiv Kumar from Dubai has already bought in the shares at 297. That's the average price. Should they continue holding on to this one? Now, we've seen a lot of uncertainty within the specialty chemicals sector. Ashish, would you suggest holding on to this for the longer term?
Well, frankly, I haven't tracked this one also, so I wouldn't like to comment on it.
All right. We'll take it to Nirav then. Nirav, how does Chemcon Specialty look on the charts?
Yeah, See, I believe this stock hasn't done much, and I don't see much volumes as well. So better to avoid this stock, exit the counter, and probably go into something a chemical stock which is doing pretty well and above all-time highs. So RCF is something I would suggest to move into. Sell this one and buy RCF. It can probably double in the next 6 to 12 months.
The next one, Ashish, is on Nelco. This is NELCO. And we've got a viewer, Sandhya from Hyderabad, who has bought at levels of 871, asking whether to hold the stock. What's your view? Do you have coverage?
Yeah, I have tracked this company. I think it's a very solid story, and I don't see any reason why you should be worried about a small fall. I think continue to hold on to. I think you will do very well going forward.
All right. Next up, this one's from Pervin, and they're talking about GE Shipping. That's a Great Eastern Shipping Company. Now, he has already bought the stock at 300 levels. The current price is around over 1,000 rupees, so considerable profit there. But they see a little bit of uncertainty around shipping. We're seeing some conflict related to Red Sea as well. Ashish, would you suggest holding on to this one, or is it a good time to exit now?
Well, I think conflicts will keep coming and going. I think the world and the trade is not going to really see a major dent because of these conflicts. I think they'll keep carrying on. It was always like this even in the past. So I don't see, if you're obviously you're a long-term investor, you have held this for many years. So I don't see any reason to worry. Continue to hold on to. Yeah, as long as you have the long-term holding period, I don't see any reason to worry in this stock.
Okay, Parveen, hopefully that answers your question. LIC is the next counter we're looking at. We've got Muralidharan from Madikpakkam. See there, you're testing my ability to say these words, right? From Chennai. And he's asking about whether or not LIC can head up to 2,000 levels. Will it be a doubler? I mean, the question is really about what the government's plan also is going to be about this particular counter. Float is currently not very high, right, Ashish? But the counter has gained quite substantially. It's trading very comfortably above 900 at 950 or thereabouts. Would you suggest holding on, and what the probability of it hitting 2,000 based on the fundamentals?
Well, certainly hold on. And I think insurance is a sector which has underperformed, including LIC, for some time. I mean, I think, yes, it has come up from 600 levels, but this is very close to the IPO price. So it's still, an IPO investor is still not making money in this. I think the outlook is very encouraging because insurance has a long way to go here. Penetration has to increase, and LIC is a market leader by a huge margin. So while 2000 may look very stretched kind of a target, but anyway, 1500 is a target which I also have for 1 year, 1.5 year kind of holding. And 2000 is also not something which is difficult to perceive. So I think about 2.5 years, I think we should, right, in my opinion, we could see a level of around 2000 in this.
All right. Next up, we have a question from Dr. Santosh Bhardwaj from Lucknow. They're talking about Paracable, which is Paramount Communications, and they bought the stock at 92. Now, Nirav, should they continue holding on to this one? It's trading around 111 levels. Yeah.
Oh, yes. Continue to hold on. It's a multi-year. This is the first time this stock went above the 70 levels post 2007. So whenever such things happen, the stock generally moves up very aggressively because it has remained in a range for about 15 years. So I believe this stock will more than double from here. Continue to hold on. You can keep a trailing stop loss now of about 80 for your longs.
Got it. Nirav, Ashish, thank you so much for joining in. We're completely out of time on this particular edition. And thanks so much for answering all the questions you did. Viewers, if we missed you out, it wasn't intentional. Of course, we ran out of time. And some of you, I've told you we will take tomorrow. We'll be back tomorrow at 11:30. In the meanwhile, lots of coverage on markets, business and everything else over the course of the day. You'll find all of that right here on NDTV Profit. Do stay tuned.